What if I told you there was a secret that ultra wealthy individuals and successful digital entrepreneurs are using to pay almost no taxes, and that you could do the same to keep more of your hard-earned money in your pocket? Stick around, because in this video, I'm going to show you exactly how they do it and how you can too. If you live in a high-tax country like Germany, the UK, France, or Canada, then you probably don't need me to tell you that you're losing 30 to 50% of your income to taxes. And most digital entrepreneurs don't even know there's another way. If you don't have the right structures in place, then you're missing out on massive tax savings and global opportunities. But don't worry, you're not alone. The ultra wealthy have been using a system called flag theory for decades. And I'm about to show you exactly how you can use it for yourself. Okay, so let's dive into flag theory. It's a strategy that the ultra wealthy and successful digital entrepreneurs use to minimize taxes, protect their assets, and maximize their global opportunities. And is built on 5 key flags. And you can think of these like flags that you plant in different parts of the world in order to minimize taxes and unlock more global opportunities and freedom. So here's a quick breakdown of the 5 flags. So first, we have your tax residency. Now, this is important because it dictates how much you have to pay in personal income tax. So flag number 2 is your business, and this determines where your business is set up and how much corporate tax your business pays. So flag number 3 is banking, and this one is important because it impacts your financial privacy, your tax reporting, and how much tax you pay on things like interest and dividends. Moving on to flag number 4, which is your assets. And this is all about protecting your wealth. So where you hold things like your investments, your real estate, in order to avoid excessive taxes and risk. And finally, we have flag number 5, which relates to your citizenship and your passport. Now, this is less about taxes, unless you're from somewhere like the United States, and more about global mobility and freedom. So ideally, you want to have a passport that gives you the freedom to travel to a lot of different countries with minimal restrictions. And perhaps you have 2 or 3 different passports that increase your global mobility and give you access to lots of different countries, lots of different markets, and lots of different banking options. So the trick is to move your tax residency to one of these tax-friendly countries while maintaining a citizenship and a passport from a country that's going to give you good global mobility. And in a lot of cases, once you have your tax residency in one of these tax-friendly countries, you don't even need to spend a whole lot of time there. Okay, so now let's talk about how flag 1, your tax residency, flag 2, your business, and flag 3, your banking, can help you legally minimize your taxes if you plant them in the right places. So first, let's talk about your tax residency. Now, this is where you officially live for tax purposes, and where you live matters because it determines how much personal income tax you're going to pay. So some countries like the UAE have 0% income tax, which means you get to keep 100% of everything that you make. And then there are countries like Panama, where you don't pay any income tax on any foreign income earned outside of Panama. So let's say you have your tax residency in Panama and you are a digital entrepreneur, you sell primarily to Europe and to the United States, then you wouldn't be required to pay any income tax on any of that money because it's being earned outside of Panama. And then there are also countries like Malaysia where you don't pay any income tax on any foreign income earned outside of Malaysia, as long as you don't bring that money into Malaysia. Okay, so now let's talk about your business location and structure. Now, this is where your money is coming from, so it's crucial that this is also set up the correct way. So when setting up an offshore company like an LLC or an international business company, you can completely avoid corporate tax by setting up your business in a jurisdiction with 0% corporate tax. So an example of this would be Wyoming if you're not a US citizen, or somewhere like the British Virgin Islands. So this is how wealthy individuals and successful digital entrepreneurs use offshore companies to pay no tax on their global business income. So here's how it works. So an offshore LLC in a 0% corporate tax jurisdiction like Wyoming is considered a disregarded entity when it comes to taxes. And what this means is it's subject to pass-through taxation. So any profits pass through the company and they flow directly to you as a member of the LLC. So the money moves through the offshore LLC where there's no corporate tax and directly to you. And if you have your tax residency in a country with no personal income tax, then you're not going to be liable for any personal tax on any of that money either. This is a simplified example, and if your business is a little bit more complex, you might want to consider a different structure, like perhaps a holding company. But as long as you're setting up your business in a jurisdiction with 0% corporate tax, then your business is going to be able to avoid or significantly decrease the amount of tax that it's required to pay on global income. So in simple terms, your business can avoid paying tax if you set it up in a zero tax jurisdiction. Now, finally, let's talk about banking. And where you bank is a crucial piece of this puzzle because it can have a significant impact on your tax liability. So by banking in tax-efficient jurisdictions like Switzerland or the UAE, you can lower or in some cases completely eliminate the tax you pay on things like royalties, interest, and dividends. And top-tier banks in these jurisdictions will also often offer premium services that are not available in the public banking sector. So let's take the example of a British citizen who has established a holding company in Cyprus. Now, Cyprus is a country that has established a good network of tax treaties with other countries in order to lower the amount of withholding tax on money coming into Cyprus. Now, if this British citizen also set up an offshore bank account in Cyprus, he could then receive foreign income such as dividends and pay a lower tax rate on that income than he would if he were receiving that money into a British bank account where withholding taxes are higher. Now, I know you're probably thinking, is this legal? Yes, offshore banking is 100% legal and it's widely used by wealthy individuals and successful digital entrepreneurs. The key is just to set up everything correctly so you're not triggering any tax residency in a high tax country or falling into any hidden tax traps. Now, this is a very simplified example of how you can very strategically choose your tax residency, your business location, and where you bank in order to significantly lower the amount of personal and corporate tax you pay, in some cases all the way down to zero. The power lies in moving your tax residency to a location with low or no personal income tax, setting up your business in a place with low or no corporate tax, and then banking in locations that are tax efficient. But remember, this is just a starting point. So if you're serious about making this work for yourself, it's crucial that you talk to the right people to make sure that you don't make any mistakes and that everything is set up correctly. So now that you know how the ultra wealthy pay almost no taxes, it's time to take action. If you're ready to start minimizing your taxes, you've got a good starting point, but it doesn't end here. If you found this video helpful or interesting, then hit the like button and subscribe to my channel for more content on legal tax minimization, asset protection, and foreign investment. Thanks for watching, and I'll see you in the next one.